Hey, happy Friday, everyone. Good morning. It's about 7:30 a.m. here on the East Coast. It's September 6th, and prices of BTC are currently right around $10,900. All right. So, what happened overnight, at least overnight for here in the US time zone, and what can we make of it now, right? So first things first, if you watch my analysis from yesterday, again, hit the subscribe button or hit like on my YouTube videos, and you should be getting more related videos like my analysis today going forward. Okay, so from my analysis yesterday, I said that we were in this sort of pennant, in the making, right? However, when we came to this point right here, right, this wick candle, this is usually known as a SFP. Okay, so I'm going to write that right there. All right, why is it an SFP? It's a swing failure pattern. Basically what happens is once you set a high in your first movement, right, typically you'll get a retracement and then you'll try to overshoot that same high, but with a fake out candle like this. What this does right here is prematurely makes people go long right here, right? And traps them right up here. Excessively long, actually, because most people are really looking for the same thing right here, right? They're looking for a nice 1 hour or 4 hour close, or rather a movement to the upside beyond this, and then they can go long, right? Whether it's bots that are triggered the same way or just, people in general, right? Mostly it's retailers that get triggered by this. And so then this actually forces people to go along, but then price actually pulls back the other way. And this entire movement, this is, almost 24, 30 hours of, pullback right here. And so people freak out in this 30 hours, okay? This is where the panic ensues, and then prices start ticking back up. Now, usually this doesn't have to happen. This rounded movement that you're seeing, where prices broke through this SFP and successfully closed above, this doesn't have to happen. Oftentimes, what the SFP does is something like this, okay? So you'll have a movement up, right? Then you'll have a pullback, a sharp movement back up. This traps people for longs, and then the price just dumps, okay? So what this does is it creates fuel right here to dump the price, because basically the people who want to get rid of this asset, they'll, pump the price up here. They'll get FOMOers to buy the asset off them, and then they'll short the market. The professionals will short the market. Okay, so when they short the market, it's perfect fuel when you go like this, push the price up, and then you start dragging the price down, because the big players have already sold their assets. So when prices start turning down, these same people who FOMO'd up here will add fuel to the fire by selling their asset, thus further accelerating the movement of the shorts, and this further pushes the price down. Okay. However, what we're seeing right now is a nice price movement that's broken past the SFP. Now this right here, this movement that you're seeing right now is a clean, breakout. As you can see, this 4-hourly candle broke above these two levels, right? This is exactly what we were waiting for, 720, right? I said 720, 750, somewhere around there to be safe, to be able to long. And that's actually exactly what we did in our Cryptosomniac community this morning, okay? I went long right around 10,770 or so on average. But now we're coming up fairly close to this resistance. So it's a nice, quick scalp, if you will, right? If I pull up this marker right here, let's just say from here to this box right here, it's about, 2% or so right there to the 10,900 range. If it goes higher, that's 3 to 4%, right? So regardless, a nice, good gain that you could be proud of for waiting patiently above this SFP and then going long. Now, what I'm planning on doing is once price gets up here in this red box, I'm definitely going to start trimming down my long position. Why? Because you can see a rejection right there, right there, right there. This was then retested as support and then broke through, but then this was also support, but then finally could not hold this area of support. So this red box is really the area where there's a lot of reactions happening. Again, also a rejection right there, right? So a lot of reactions happen in this red box, and that red box starts around, you can see the white markers right there, around 10,900 all the way to about, let's just say 11,100, right? It would be wise and safe to get rid of your longs up here and potentially, again, potentially open shorts. However, I'm not going to open shorts right away. I might start scaling into shorts right here, and then start scaling in even more as prices give me confirmation that it keeps going down. But if I do see an SFP like this, like that, where I told you that there's going to be, say a movement up here, then prices pull back, and then a sharp movement up here where the 1 hour just leaves a big wick, I might short that too. And then hopefully this thing kind of collapses. Okay, so you know my game plan now, right? And this is really what we do in the Cryptosomniac community, folks. We lay out everything, right? All the possibilities, all the probabilities, and then we start making informed, educated decisions based on that. It's not just, if you think price is going to do this or that, then you trade. No, you just really wait for your technicals to play out and trade based off that. Now, I'll show you another thing. On the 30-minute chart, this is where... actually, maybe it's this one right here. On a 30-minute chart, this is where I started seeing positive signs, okay? This is where I started setting my alerts right here. So the way you can set alerts is like this, all right? So once you see the indicator, excuse me, once you start seeing the indicator start giving you lower highs like this, as you can see, in this trend line, what I did was I started seeing the RSI trying to break out of here. So all I did was set an alert right here, and you go like this, right? And you just set your alert. As you can see now, there's an alert right there, right? So when you see your RSI breaking above that level, this is an area you could potentially long as well, because typically, the RSI is giving you signals a bit more in advance to price. Not to say that it's going to break out up here, but rather that, hey, I'm trying to break out of this potential resistance. So this is the first area that I'm breaking out of. Now, once it breaks out this triangle, that's the second area. So this was your first signal where the RSI broke out. Your second signal was, this triangle breakout right here, somewhere around 10,660. And then your third signal was, like I stated, over here, which was above the break of the SFP, so around 10,720. So you had 3 confirmations on 3 different time frames, right? Or 2 different time frames, the 30-minute and the 4-hour. So this was enough to tell me to go long, okay? Now, to tell me to go short, okay, what I'm going to need to see is a decline in volume in buy side. I need to see the sell side volume step up. Now, in this case, okay, what I'm seeing is, as you can see right here, the buy side volume down here, I don't know why these things come up, the buy side volume right here is slowly starting to move up like this, right? You can see right down here, it's starting to go like this, right? So what I'm really waiting for is that final big candle like this volume bar right here to hit this top of this resistance. And then I'm waiting for a follow-up sell side candle, kind of like this one right here, okay? Once that starts, I will probably begin shorting, at least start scaling in, okay? Again, I personally think that this is a somewhat positive sign that the candle spread is getting bigger and the volume is starting to increase, although I would like to see higher volume. So hopefully that comes in on the final candle to the upside. I don't know when that's going to happen and if that will, but like I said, I'm looking to sell in this red box, so I'm a seller up here, okay? Alternatively, if you're willing to sort of catch the knife and you think that prices are going to go higher, you could wait for a retrace down to this green box again and wait for that movement back up. I don't quite know if that movement, down here is going to be very healthy because we've already sort of touched this level. You could see right here, we've touched it once, we've touched it twice. So that's, enough of this area, this resistance block right here, this support, resistance right there. As you can see, resistance and resistance, all that's now turned into support as per this, blue arrow that you can see. Right? So as per this blue arrow, we've turned this green box into support. And so I don't want price to come back here again for the third time, especially once it's broken above this SFP. What I would like to see is if price does break up here, comes back again, somehow retests this, and then moves back up, that's a very positive sign. But I mean, I personally think that if price does go back all the way up here and then it's coming back to this, chances are it's not going to hold this. It's going to break it, okay? Because it's going to now attract enough sellers from this area and not enough buyers to hold up the price when coming down, especially when it's already been tested as support right here, okay? So the way to sort of read, the support and resistance levels is you want to just be able to tap it once and then just take off, okay? Obviously each time you tap a support or resistance, it gets weaker and weaker, okay? But the strength of a resistance or a support is measured by something like this. You can see price went down like here, went up, boom, sharp rejection, didn't even look back, went all the way down, excuse me, to about 9,000 and then came back up here again, boom, sharp rejection, came back down. Over here, now we didn't have as sharp of a rejection. We only came down here and then we broke through, okay? So this is really your sign, your third time when you hit this resistance, this is your sign that, oh, it looks like this is not as strong of a rejection, and then pushes back up with a deep candle, and now it went above this level. So in this case, I would say that, price has tapped this red level once, twice, 3 times, 4 times, and now it's coming back to a 5th time right here, okay? So if this 5th time is something like this, where price has gone up like this, then it comes back to 10,000, let's just say 750, and then it pushes back up, this is another opportunity for you to long, okay? So this is the way you sort of want to trade this this area, okay? All right, we went over that. Let's see how the daily is looking. Now remember, we are also coming up very close to the daily resistance marker right here, okay? This is where things get really interesting, all right? On the daily, you can see that this trend line resistance is meeting price very closely, all right? So again, that matches up with our targets right around this 10,900 area, okay? So once I start seeing price breach into this area, or I might even sell soon because it looks like there's a lot of sellers coming well before price even reaches there. But once price starts reaching into that area, it might be time to start getting, cutting down your longs or your spot buys, okay? Let's see. So yeah, so we went to the daily. One bad thing, I guess I don't like, is that, this volume bar right here is fairly small. I don't know how I feel about that, but then again, we still do have about 12 whole hours left in this daily candle right here. So by then, I wouldn't be surprised if the volume bar starts stepping up. A good thing about, this right here, these two candles, is look right here, the sell side volume dropped off significantly, okay? So again, another positive sign in these two sell candles, but not as positive of a sign in this, demand candle right here, okay? So if we see some significantly high volume, I'm expecting, the breakout beyond this trend line, go all the way up here to about 11.2, 11.3, make people FOMO, and this will be the perfect, sort of bull trap to set up here and then pull prices back around. Because I bet you that everyone's looking at these levels right here, right? Most retailers are for sure. So the best way to trap these people is push the price all the way up here and then drive it down. Now that would be the most painful way to sort of drive this market up then down. And the markets are all about, sort of inflicting pain on as many people as they can, because that's really where the liquidity is, right? The market will always be driven by where there's liquidity. And in this case, the best way to generate liquidity or expose those who are far more over leveraged is go up here, then pull back around. All right. Let's see. Okay, so here's Ether. All right. So I don't know if you guys remember, but maybe end of July, beginning of August, I had posted this chart right here. Okay, and it stated that, actually, I think we were somewhere up here, if I'm not mistaken. I stated that, for the most part, when ETH was right here, I did not think at all that it was going to hold. I said that we would more than likely come back to this red box right here. And you could see for, almost a month and a quarter straight, we've just been selling off, coming very close to this red box. And that red box is between 0.13 and 0.15 essentially right here. So if you are, someone who's longing ETH, this might be the area, which is another maybe 5-7% drop from current prices into this box. This might be the area where you want to consider longing. Again, not financial advice, but I'm just saying that this will be the area to long rather than right now. Or you could just wait for confirmation to ensure that price does come here and then bounce up successfully. Okay, but ETH does not look good by any means. I'll be completely honest, but neither do any other alts. So for the most part, alts look like crap. The charts look bad. Most alts are not moving, whether BTC moves up or down. I think the whole sort of Binance creating a separate exchange for U.S. customers versus international, I think that's starting to put the U.S. customers sort of in a box, and I think money from the U.S. is not easily flowing to altcoins, which, in my opinion, I think a lot of the hype in 2017 was generated probably more likely than from U.S. customers, and especially Asian customers as well. But I think that hype has sort of died down, and I think that the chickens are coming home to roost, if you will, and that kind of brings most altcoins back down to earth. And people thought that in December they were already back down to earth, but clearly not, right? Bitcoin is really showing that the market is saying that this is really the only use case for crypto, which is potentially money and maybe a financial system. And so that's why you see Bitcoin, is up, I think 30-40% for the year, or not the year, the last few months, versus most other altcoins are essentially down now, So it's really hard to say that, alts are a good time to buy right now, or even when they hit their critical support levels. But anyway, let's see how ETH US dollar looks. Okay, here's ETH US dollar. I'm going to pull this up on the weekly chart. Let's see. On the weekly, you can see right here, price is starting to sort of bottom out. You can see it's basically stalled at 177. If it does close a candle like this, hopefully with a even larger wick to the upside, this might be your inverted hammer potential reversal candle, and hopefully this starts a new leg, new journey for Ethereum. But for now, there's really nothing. There's really no life in altcoins, and I hate to say it, and I am a ETH lover, and I hold a lot of it for the long term, but even Ethereum is just really struggling. So that the money is just not there, But I would say that once Ethereum crosses this red box right here, that red box reaches all the way up into 350 or so, 330, 350. Once it crosses this red box, I think prices are going to take off. And I think, they're going to take off really fast, really hard, probably hit 400 really fast, and then maybe, 500 or 600. But until then, until we get beyond this red box, I cannot even think that we're going to cross anytime soon, until the real volume comes into crypto and starts bringing these altcoins back to life. I wouldn't necessarily call Ethereum, just an altcoin like every other altcoin, but still, I mean, it's not Bitcoin, let's just say, right? Another thing that I don't like about the daily chart is, let's see. Okay, so if we sort of look at this trend line right here, right, this white trend line, we've already sort of tapped this trend line multiple times, right? Once, twice, essentially 3 times. I mean, if I raise that trend line up a little bit more, that's basically I would say it's a descending triangle, right? It'd probably be something like this, okay? I'd probably say it's something like that. Okay, so that would be your descending triangle. And I've pointed out before that descending triangles, you know what, let me do this. I have another chart actually that should point that out. So descending triangles like this did not go well for Bitcoin last year. Now, that doesn't mean anything because this is only one fractal, right? But more often than not, okay, here's why descending triangles are not good, especially right here on the top, okay? The fact that when we bring this up just a bit higher, right, I sort of want to exclude these wicks because this is really, typically the wicks are a lot of FOMO or a lot of panic. The candle closings are fairly important, right? So in my opinion, okay, and if you can look at this on any other exchange as well. If you look at the candle closings, okay, you can see that they're very close to each other in terms of candle closings right there, right? Now, obviously, if we're just looking at candle closings, this is a low, higher low, another low. Technically, this low is pretty much on par with this low, okay? But I think even if we consider the wicks or even how close the candle closings are, I don't think, in my opinion, they're enough to justify a clean higher low. I think the wicks or even the bodies lean too close to the previous low that was put in. So what that tells me is this area right here was not only hit once, but twice, and then over here 3 times, okay? So once this support right here, which is this order block right here, was hit 3 times, I'm almost certain that this area of buyers is weaker, okay? But I guess you can make the argument that, hey, well, this time, first time it hit, created this lower high, but then over here it created a higher high as per this swing right here. And then prices again came back to that same level right here with this big wick, created this lower high, but then now prices are taking out that same, high right there, or looking to take out this high right here. So could you make the argument that this level is, really that weak? That's a fair point. So I would say this is 50-50, right? And being that this is 50-50, given that every time this support has been hit, technically every second time it's become stronger, in terms of a push up, but then beyond that, it's also been hit 3 times, it's become weaker. So I would say this is a 50-50 in this descending triangle, which is exactly what descending triangles are. They're really continuation patterns. And if we look at this as a movement up for the last several months since the beginning of the year, the continuation out of this should be like this, okay? But that's yet to be seen, right? We haven't seen sort of volume sort of expanding and pushing up and out of this. What we've seen is a contraction in volume, which is, again, a good thing when you have prices consolidating in this pattern. You typically want to see volume going down. But another thing that you want to see is around 60 to 70% of this pattern, you typically want to see a breakout. Okay, the fact that it hasn't broken out yet, because we're already almost 80% into this pattern, okay? And I wouldn't be surprised if we go in a little bit deeper. For the most part, when you see, the pattern playing out all the way, more than likely it's, a failed pattern, okay? You can look this up on the pattern site, which is I think Bolkowski's site of chart patterns and volume analysis in chart patterns. So that tells you that, the website tells you that what you should be looking out for is a breakout, somewhere around here. This is where we should have broken out. Yet we didn't. We just kept going, like this, right? So, you know, I'm a bit more careful in calling this just a continuation to the upside. I'm just going to say, just to be safe, that this is really a 50-50. And, you know, you could see right here, right? Even in this descending triangle right here, I mean, we saw the pattern bleed all the way into the edge of the apex, and then it just bled down. So that's one thing that I'm cautious about. I'm not saying that it has to happen. I'm just saying that just beware, okay? Just beware, you know, anyone who's telling you that this has to go up, I don't know. I would question that, to be honest, okay? All right. But again, you know, with that being said, we are up, you know, handsomely for the entire year of 2019. We are printing a potential continuation pattern, or a pattern that doesn't necessarily mean that we have to go down, right? So in that regard, we're doing all right, okay? Other than that, I'd say the volume analysis over here, especially on Bybit, is starting to look decent. We are starting to break above this trend line that did hold us down right here for these two candles, as you can see right there. So this is another positive sign, which could then again take us all the way to a high of 11,000 as per this chart, which is then meeting this descending trend line right here. Okay, so I think, you know, for the most part, this is a positive sign that prices are moving up, because for now, I don't see anything else in the way. I mean, other than maybe this closing right here, these candles closed, let's see, around 10,929, and this one opened at 10,929. So this is really the next area of rejection potentially, which we've already stated as per this chart right here, which is the 4-hour time frame, right? Let's see down here. Okay. Where'd it go? There we go. There we go. So as we've already stated that this, you know, 10,900 level would be the area to start, you know, potentially taking profits in, right? So once we start sort of looking at this area as resistance, not only in the 4-hour, but that daily time frame that I showed you earlier, right? Like right here, okay? And this is on multiple exchanges that are telling you that 10.9 is really the area to start being a bit more cautious. You know, that might be the area to start taking profits, and maybe, you know, sitting back and seeing if the market actually has strength to break above 10.9 or 11,000. All right. Let's see. I do have this pitchfork that I wanted to show y'all. Let's see where this is. Here's the wrong chart. Here's another chart. Let's see. I think it's down here. There it is. Okay. So here's another positive sign about this pitchfork. And this is something that I didn't realize till yesterday while I was looking at my pitchfork. Okay. Notice over here, right? When prices hit the wider range of the pitchfork, now this outer red band right here is the 1.5 fib extension. Okay. To both sides, it helps out here and it helps out here as resistance. So you can see once price broke out of this area right here, it hit all the way to the top. So my question to you is, if price does break out of here successfully beyond this white band right here, and it goes all the way to the red, that should be taking us fairly high if the prices are, you know, to keep on going. However, if prices do break down further, then this entire pitchfork will be invalidated, and this trend itself right here, according to the pitchfork, will be in peril. Okay, but again, that hasn't happened yet, but it is something to be cautious about. Okay, so that's what I'm saying, that, you know, in this particular area, what we have right now in Bitcoin, this is really the area that we need a clean breakout above. Oh, I don't know what's going on, but anyway, over here, as you can see, this is really the area we need to break out like soon. Okay. Especially because we're coming to the apex as per, you know, this pitchfork right here. We should be breaking out instead of going down further, because it may put our entire sort of, you know, momentum and trend from the beginning of the year in peril. Okay. Let's see how, I know everyone's wanting to check out Bitcoin dominance. I've done the dominance chart a bunch of times. Let's see, here's the Bitcoin dominance chart. Here's the Bitcoin dominance chart. You know, it's refusing to sort of break below this wedge right here. I drew this wedge somewhere around here, I think like middle of July or something, and yet it still, you know, keeps on going, right? And you can see that it's not giving up just yet. It's aiming for this high that we had way back here in July 2017 before the high was put into the Bitcoin dominance before the drop off. And I think as per the candles, this high was somewhere around 77%. Currently we're at 73%. So that would be really interesting to see price reach back all the way up here into that 75 to 77 point level as resistance before we had this ICO craze right here. This is where all the ICO craze happened, and that's why we saw that big drop off in Bitcoin. Okay, so I would say that would be the area to watch. And that might be the area where that falling wedge really just plays out. You know, prices reach all the way up, or the dominance reaches all the way up into 75 or 77 points and then drops off. And I would say the best area for it to drop off would be way down here. Okay, if prices, or if the dominance is truly to drop and we're supposed to have an alt season. But we didn't over here because the dominance kept taking off. So I wouldn't be surprised if, you know, it just drops off sharply in like maybe a week or two. Okay. I think that sort of does it, folks. I've given you all the analysis that I can give you. You have a lot of the information that I'm utilizing. We've looked at the daily pitchfork, the daily time frame, the 4-hour, the 30-minute, so all different time frames to give you an exact idea of what to look out for, maybe how to even trade this market. Again, our information is solely for educational purposes. Please do not use it as financial advice, but do come join Cryptosomniac.com for more education and more information on how we set up trades and how we put up analyses. Okay, all the lock channels right here are where we put a lot of the magic. Okay, where we provide trade setups, where we provide information on Bitcoin analysis, and you can see I provide analysis every few hours. You know, I know most people are in other paid groups, and they get to hear from their paid group leader, once a day, maybe twice a day if lucky. However, us, we do this morning video, then we do multiple updates through the day, and we're fairly active. Jordan and myself, we're fairly active through the day. So you can see that, we're a very active, engaging community. You're not going to get dull moments where you won't hear from us or see us for days. Okay. So come join Cryptosomniac, folks. Hit the products page right here, and you can buy the technical analysis course and also get 7 free days in our Advantage community, all the ones with the lock channels. Or you can just simply buy Advantage subscription right here, and you get access to everything right away. Message myself right here or Jordan if you have any questions or concerns. Okay, take care. Cheers. Give us a thumbs up on this video, folks. Hit subscribe, and hopefully you get more free content. And I'll see y'all soon. All right, cheers.